Thank you, everyone. Good afternoon. It's so great to be here. I've heard the previous sessions have been fantastic. I love to see the crowd still awake and energized and hungry to learn. I'm more excited about the panel today that we have. It's titled The Future of Wealth Creation. And who doesn't want to learn a little bit more about wealth creation? And I'm excited with the panel that I get to moderate today. We've got Eric So, who is the managing director and co-founder of Trinity and Venture Partners. And he flew all the way from Dubai to be with us here today. So I think he gets the award for the longest distance traveled. Next, we have Max Dural. He is the founder of Project Reach, based in Texas. Really excited to have him. And then Nadia Vanderwall, who is the vice president on CSBB's diverse customer segments at Wells Fargo. So I had to keep my notes for that one. That was a long title. So as we all know, there are pretty much three main pillars in terms of wealth creation. There is homeownership, there's savings and investment, and then there's entrepreneurship. And I'd like to take the discussion today to learn about, in each one of your areas, what do you see as the current challenges we're facing and the approach you're taking to address those challenges in today's environment. And we'll start with Eric, since he's right beside me.
Thank you very much. First of all, thank you for having me here. It's absolutely incredible. It's my first Hope Farm, although I've known John for quite some time. And they make a lot of me flying all the way from Dubai to be here. I'll be honest, I would have flown around the world a few times around for John. And the people that I've met here have just been absolutely incredible and refreshing. And I love mentorship and chatting with folks. Of course, I say the advice is always worth what you pay for it. But it's just phenomenal, the energy and the folks that I've met here. So thank you very much to Operation Hope and everybody that's been involved. As it relates to the future of wealth creation, it's an interesting topic because I'm a serial entrepreneur. I am a recovering lawyer. That's how I started my career. As much as I loved billable hours, the business world was really more for me. But I always tell people that throughout my career, I've always had different amounts of money, but I've always been happy. And when one talks about the future of wealth creation, especially what we've seen over the last few years with the pandemic and challenges in mental health, is the first question you have to ask yourself, any entrepreneur, any person in this room has to ask themselves is what do you want to be? What's going to make you happy? What will make you fulfilled? You have to answer that question first and foremost before you talk about money. Wealth itself, richness, there's lots of people that talk about that term and what that means. Some people, it's financial wealth. To some people, it's being able to see your kids every night and help them grow up and be instrumental and mentor them in life. For some people, it's about having a certain standard of living. And to that, I tell folks, $1,000 gets you a different amount if you're living in New York City, if you're living in Mexico City, or if you're living in Kuala Lumpur, right? So we live in a world today where you can pretty much work anywhere on the planet. Dollars will get you different standards of living. So you have to kind of figure out what your path is and what you want to accomplish, because any decision that you make solely based on finance is probably not one that takes in consideration everything that's important in your life. And we can talk about the wealth creation part throughout the conversation today and entrepreneurship, but I just wanted to open with that and turn it over to my fellow panelists.
Well, Max, you do some amazing work in Texas, and we're really excited to learn more about Project Reach. What is your take on what Eric was talking about in terms of creating wealth generation?
Yeah, I think wealth generation is a really important topic. And before diving in, I do want to thank Operation Hope for letting me be here. Shout out to my team on the front row for being here as well. But really thinking about wealth generation, I think what's most important is starting with a strong foundation, and that's with financial literacy. Financial literacy is key to be able to not only build wealth, but maintain wealth. 50% of Americans aren't even financially literate, and with a decline of 2% over the last 2 years, it's kind of an alarming trend heading our direction. And so to be able to have a strong foundation for wealth building, first you have to understand that it's a long game. It's not a short game, right? You have to put off your current desires for your long-term aspirations, because if not, your dreams today will become sacrifices if you aren't willing to sacrifice what's happening here in front of you today. And so I'm very passionate about financial literacy. How can we help people understand what they have, where their money is going? How can they choose where they spend that money instead of determine later how that money just disappeared and where it ended up? And so at the REACH Project, we start with those foundations. Financial literacy is the most important. How do we create a mindset? How do we do a paradigm shift that allows people to build that wealth and then retain that wealth? We also have homeownership and entrepreneurship programs, which statistically speaking are the two best ways to end multi-generational poverty and create a better future for yourself and for your children. And so at the REACH Project, we help with everything from building budgets and actually teaching you how to build credit and repair credit. We actually then go into teaching you about the different types of mortgages you can obtain. How do you go after down payment assistance program, which are available all across this country to help make those missing pieces come together to become that homeowner. But then also entrepreneurship as well. Entrepreneurship is incredibly important. Entrepreneurship is something that can really raise your ceiling if you're willing to put in the hard work and the dedication to get there. And so what we do at the REACH Project is we help turn side hustles into full-time legal gigs. We think about those jobs that you do to make ends meet. First, how does it start to impact a community when you're actually paying taxes on those jobs? But then when you start to build that structure and you have those protections in place, then you're able to actually start going after investors and starting to build out a platform that can serve you and future generations. And so I think the most important place to start for everyone is a strong financial literacy basis. It's not just what is a bank account, what is savings, but then learning how does the market affect you? What is a Roth IRA? How can you use bonds and stocks to actually make your money work for you so you aren't just working for your money at all times?
Thanks, Max. Nadia, interested to hear a little bit more about your take on this.
Yeah. I think in part what Max is getting at is that the future of wealth should be a future where everyone has access to wealth. And I think that it's helpful to start with how we define wealth, which is our assets minus our debt. And that we can't build those assets, we can't purchase them, if we're not thinking a lot about that important precondition of financial security. And my team, the Banking Inclusion Initiative at Wells Fargo, focuses very much on that side of the equation, as well as the information and literacy side that Max is talking about. Our initiative is focused on ensuring that all low and moderate income families are better banked. And the idea is that that work in part reflects that the people who have the least access to wealth are some of the fastest growing populations in this country and also are disproportionately diverse. And how can we remedy that? Through financial coaching is one key pillar of work, education, awareness building campaigns. But secondly, making sure that we have consumer-centric, affordable solutions, whether it's micro stocks, stock fractions, small dollar credit to make sure people have access to financing, or a starter bank account that's Bank On certified and affordable. And then lastly, we know that we can't do this alone, and we have to tackle systemic barriers in a systemic way. So how can we engage and partner with the industry and actors like those of you in this room? And so we're very much focused on that financial security piece. But a piece I've been thinking about is once we've amassed those assets and once we're thinking about what to do with them, how do we maintain and preserve them? Because the story of wealth is also one about how we pass it on to our families and how we protect their wealth. And so I think that's a really important thread to the discussion today as well.
Thank you, Nadia. I want to talk about some of the challenges that our entrepreneurs are facing today and some of the tools that might be available to them to overcome those. Eric, do you have an opinion on that?
Sure. So if entrepreneurship is what you want to do, and I just want to make sure there's a productive conversation for everybody here. So what percentage of folks in the room want to learn more about entrepreneurship and wealth creation through that? Okay, that's good. How many of us want to learn about it through real estate and then through traditional investments with managers, stocks, bonds, equities? Okay, so an interesting mix kind of all over the place. So in the universe of entrepreneurship and tools that are required to succeed in that world, a lot of people, first of all, need to take stock of themselves. And this is where you have to be really honest with yourself. What are you good at? What are you bad at? What do you want to focus on? What are you passionate about? What do you not like at all? And this is not something that you get by talking to your spouse or talking to your father or mother-in-law who will criticize you. This is an honest inventory of your assets and skills. Then you have to look at and kind of define the goals that you want to accomplish, because for some people, there are different aspects to entrepreneurship, right? There's the sales and marketing side of the universe. There's the whatever you're trying to create. The one thing that I always tell everybody is that if you look at all of the organizations, large organizations in the world, there's often tons of people that are there. So you don't have to do it all. And as a first-time entrepreneur, you might think you have to do everything yourself, but you can find partners, you can find people. I always tell people I'm rarely the smartest person in the room on any project that I go after. And I want to remind everybody that, yes, it's a tough road. First-time entrepreneurs, I think the success rate is something like 20%. But did you know that second-time entrepreneurs, the success rate is almost 30%? Right? So it goes up by 50%. And why is that? So I tell people a couple of things, that contrary to popular belief, marriage is still the leading cause of divorce. And failure is the leading cause of success. And if you look at some of the fantastic entrepreneurial stories of our time, like Steve Jobs, he got kicked out of his own company, right? Of course, he founded a little company called Pixar along the way for doing so that probably helped him out. But he also, Apple almost went bankrupt a few times in its life cycle. So you have to really understand that adversity, challenges, problems, that's where you learn things. And you shouldn't feel like you need to tackle those on your own. There are technological tools and AI that can help us out. But the most important thing, I think, is finding the right mentor, right? Over the years, I've been very fortunate to have many great mentors in business and life, and finding the right partners to get around you. Then you can start looking at, hey, let's figure out what area of the market we want to attack. Let's analyze that and then do the math, and because you'll have to come with your business plans and your marketing plans and all of that. But I think the first and most important thing is understanding really what your inventory of skills and weaknesses are, how you can supplement those, and finding the right mentors to help you out, and not be afraid of failure. I'll be honest with you, my first venture was a failure, my second venture was a failure. I don't tell people I'm successful, I've just failed so many different ways that I figured out how not to fail the same way twice. So my wife would be the first to tell you that, actually, but just my 2 cents.
I appreciate that. Nadia, Wells Fargo is so instrumental in building up our communities. How are you tackling the challenges that our entrepreneurs are facing today?
Yeah. Well, I think it's important to recognize just the gap in access to credit in this country, given how important an ingredient that is for getting any kind of business started. In fact, in the latest FDIC survey of unbanked and underbanked, I think something like 1 in 4 African American and 1 in 4 Latinos don't have access to mainstream credit. And so our team is thinking a lot about 2 things. What kinds of lending products can we provide? If we can't provide them, how, through our small business navigator, do we connect Wells Fargo and other consumers to CDFI solutions and generally support the CDFI world? And then how do we provide advice and planning and guidance, whether it's through our LifeSync app, which allows you to set goals and monitor your progress towards them, or through some of our own coaching products, including through our partnership with Operation Hope and our Hope Inside coaching in our branches. So those are some of the things that we're thinking about.
Thanks, Nadia. Max, you're grassroots. You're right outside Houston?
Right outside of Houston.
Right outside Houston. And they're doing some phenomenal work out there. What do you see your entrepreneurs as they aspire to success, the challenges they're facing in today's world?
So y'all are both mind readers, because I was going to say mentorship and I was going to say access to capital. I mean, when thinking about mentorship, you can't be what you can't see, right? If you've never seen something, how are you supposed to understand how things work? And so having a strong mentor network, having individuals who are willing to sow into you is incredibly important. The other thing that we see is how difficult it is for minority entrepreneurs to get capital. And so there are some beautiful new trends coming online, whether it be crowdfunding or ways to do peer-to-peer lending that are changing the game, but definitely aren't something that will fix all problems. The thing that I can say that's different is the education piece. Right? That education piece is so important. A lot of the families that we work with dropped out of school 8th, 9th, 10th grade. When you drop out of school at 8th, 9th, 10th grade and you go into a service sector job because that's what your parents did, your basic education around financial literacy, around business acumen, oftentimes is non-existent. And so if you don't have someone who's willing to lay out what is a budget, what is a marketing plan, how do you actually go after capital, what documents do you need to be able to go to a bank and not be laughed out the door, right? And that's really something that we focus on. Ms. Chrissy Ransom right here runs our entrepreneurship program. It's a 28-week-long program where families that are living on the margin meet 2 times a week for 2 hours. They have mentors and they have fellows that work alongside them that teach them not only the basics of financial literacy, but 5 different certificates that allow you to actually learn these things and being able to actually go in and apply them. And so I think the education and the exposure piece is incredibly important. Incredibly important. It's not just sitting in a classroom, but it's getting out and actually practicing, whether it's through the For the Culture Market or through the SBDC partnerships that we have, where you actually get to go out and try these things in a safe environment and come back and learn from your mistakes, fail forward, not backwards, and continue to grow.
Well, it sounds like we definitely need to surround ourselves with people smarter than us. Thus, I've got this amazing panel here. And making sure you have someone that you can lean on, because it is kind of scary to go out there on your own and start a small business. There's too much to learn. There's too much you won't know. And getting that mentor or mentors or one of our community organizations that are out there to help you through that. I want to pivot a little bit to homeownership. Had several people raise their hands about interested in creating wealth through real estate. We all know the challenges that we have in the market today. The interest rates have gone up, and they're still up. You know, contrary to belief, we would think they would go down as the Fed cuts the rates, but we know they don't follow each other exactly. And we also know the lack of affordable housing. It's really creating barriers for entry into creating that wealth through home ownership. Nadia, let's talk with you first about how does Wells Fargo see this challenge and what are your proposed solutions and how successful are they?
Sure. I mean, I think, you're talking about the cost of housing, and we've focused a lot of our efforts on just helping people afford that first down payment, which is such a significant barrier. There are government, state, local programs to help with that payment, but additionally, financial institutions, including Wells Fargo, provide solutions designed for low and moderate income families to be able to afford that down payment. We have our own mortgage product called Dream Plan Home, which allows families that qualify to get a fixed rate mortgage for as low as 3%. And can provide closing cost credits and help with some of the alternative underwriting that can be such a barrier. So that's one of the ways in which we're engaging. Additionally, another side of the coin is being able to refinance when you can, and making sure that's not just a tool of the wealthy. And so, for example, we also offer special purpose credits to help some of our existing customers who qualify refinance at a lower rate.
I'm glad you brought that point up about refinancing, because as painful as it is to see the rates that are out there today, we know historically they're not as high as they have been in the past. So when you're looking at opportunities to get into owning real estate or owning your first home, it's painful as it is, there is some relief that it's not as high as it could be, and that you're addressing that through refinancing, whether you want to get in now and bank on the appreciation. Eric, you're very forward-looking in terms of investing in real estate, whether that's through home ownership or personal investing. We talked before our panel, and you had some interesting ideas on that. I'd love to hear your opinion.
Sure. So when you talk about home ownership, there's a question of whether you want to finance and use your home as an investment vehicle, and whether you really talk about real estate. And those are different things in my universe. And it becomes a question of ROI, and it's all ROI driven ultimately. So is your local area the best place for you to invest in real estate for a return? Sure, there are general tax benefits to sale of primary residency. Let's leave that aside for a second. But the world that we live in today is becoming really quite connected. And there are opportunities for you to acquire real estate in different parts of the world that may be more growth oriented and ROI driven. And techniques like fractionalized ownership that allow you to participate in ways that you weren't able to before. So, it's great if you can, get certain incentives to get that first down payment, but unfortunately, sometimes for some folks, that's just not attainable. But how do you still play in that market, or how do you play in that universe if you want to? Definitely look online. There are ways through fractionalized ownership to do that. My view of the universe is there's no reason why somebody in Mumbai shouldn't be able to own a piece of Florida real estate if they want. But this is one where I'm very math oriented, right? So if you're looking for just ROI, you have to look at the underlying appreciation of the asset class that you're investing in, whether that's homes, whether that's equities or anything else, the amount that's required to get into it, and if you have to leverage to do that, that's not a bad thing, by the way, but you just have to be able to monitor and be aware of your risk tolerances and your serviceability on your debt, and make sure you don't fall out of whack on that one. One strategy that I employed when I was younger was I would finance my principal residence. I would take the equity out of that home and leverage it to invest in other assets. So as I was paying down my house, I was generating returns with that money, so that equity wasn't locked up. Some people would say that's really risky, but I kind of live in a world where I came from nothing, so if I were to lose it tomorrow, I just make it again. But that's not the mindset of a lot of folks, and by the way, I don't recommend that as an approach for most people. But again, that's where I come to I've had different amounts throughout my life, but I've always been happy. Figure out what it is ultimately that you want to do. Where I live today, for example, in Dubai, I own real estate all around the world, but I rent in Dubai because that's what makes the most sense for an ROA perspective for where I currently am. That may change in a couple of years, but that's just one tool in the investment bag to generate, pecuniary returns in the future.
Well, I will say I'm definitely risk averse, so that frightens me when you start talking in those terms. But we do have a lot of people that makes a lot of sense for. So I appreciate we're talking about different avenues, because we know everyone has a different level of appetite for risk. Max, how are you addressing in your communities this challenge of home ownership and access to capital for that? And my alarm is going off, so we'll turn it off and hand it over to you, Max.
Of course. So like we started out saying, home ownership is a wonderful way to start building generational wealth and break that multi-generational poverty cycle. And so we do have a long-form education platform supported by Ms. Kokui over here, who goes into a 21-week education that really starts with those financial foundations, but also is starting to challenge the paradigm of what is home ownership? What is a single-family home? Do we all need a 2-car garage, white picket fence, 3-bedroom, 2-bathroom, full backyard? Or could we start with a duplex? And can we rent the opposite side? Can we use my down payment, but your monthly payment, to purchase something to actually break into that market? How do we start thinking about co-shared, co-purchased homes? Can we buy with our moms or our brothers and our sisters to start creating that stability, and then eventually turn that into a rentable asset and then go on from there? And so I think on one perspective, it's the paradigm shift in the individual. How do we start thinking about home ownership as the asset and not this vision that was created 30, 40 years ago? The other piece is how on the ground in our cities can we activate and start reducing some of the red tape? Do we need certain lot lines? Do we need 3 parking spots per unit? Can we have accessory dwelling units? How can we activate in our communities to create more realistic opportunities to get more people into that space to create that stability. And so, of course, we also promote and go after beautiful opportunities like our friends at Wells Fargo that provide for our families. There's also state and national programs that allow you to go after more down payment assistance. But we really look at it from the grassroots perspective. How do we start changing the mind of individuals that will then shift the makeup of a community that will be more inclusive and allow everyone to participate in this amazing wealth generating opportunity?
Thank you for that, Max. Yes, definitely a round of applause. You know, sometimes when we start talking about wealth creation, I think one of the barriers that comes to mind is not only where to start, how to surround yourself, but really is, where do I get that capital to start? Maybe it's that first 50,000, maybe it's that first 100,000. One of the best entrepreneurs I know would like to come on stage and dive into this topic a little more. John Hope Bryant, our chairman, founder of Operation Hope. He's definitely not risk averse either, let me tell you that. But he wants to lean in on this topic, and we just take advantage of this special opportunity. So thank you, John.
You guys enjoying this? I am thankful for all of you. Since didn't get a chance to say hello outside, thank you very much for being here. Love Project Reach, love all what you guys are doing, all of you. Eric, so thanks for coming in from halfway around the world. Isn't he cool looking, by the way? I think Eric's an honorary brother. Look at him.
I'm just trying to keep up with John most of the time, actually.
So we had a meeting of black men called Just Brothers early this morning, and Eric was offended that he couldn't get in the black meeting. So everything I heard was legitimate. There's no buts. And sometimes the messenger matters because it's just a relatability issue. And I was trying to find a way to bridge this to people who may be like, well, that was easy for you. You know my story, and I'm going to spend a very short period of time here. If I'm more than 3 minutes, just stop me. I grew up in Compton. I was homeless. My mother, God rest her soul, passed a year ago. She had an hourly job. She had a high school education. She died with $1 million net worth. Like, everything I'm about to tell you is completely, practical and approachable. And it's going to tie into what you just heard. So today, my for-profit companies are responsible for about $350 million of economic activity that I can track easily the last 5 years. I just found out last night that the nonprofit I created, Operation Hope, this one has a brand value, just the brand value, of about $350 million. Just the brand itself, not anything else. We have an annual budget of about $75 million and all that stuff. By the way, some of which paid for you to be here. So most of you are scholarship, give your, hello. It would cost you about $10,000 a person to come to this meeting, just a registration fee. And we scholarship you in because I raise the money and we reinvest it in you. So everybody here was a delegate. You were all selected. Anyway, so Operation Hope, so that's a $500 million in economic activity, and we've invested $4.5 billion through Operation Hope, et cetera, et cetera. But all this came from this kid from South Central LA in Compton. I was homeless at Lotte here in the airport. Everybody doesn't know South Central LA. I'm just trying to give a baseline here. So you can't say I don't understand, I can't relate. Okay, let's be real practical about how you do what you just said. So everybody in here knows somebody in your family who makes $38,000. Can I get an amen? Amen. Okay. Here's what I want you to do. You may not even like these people. We all have a cousin Pookie in them. We all got an uncle you won't let be around your niece. Come on. I do. But I love them. But, we don't like our family sometimes. It's okay. It's not personal. Business is not personal. I want you to do an analysis when you leave here of your family. I want you to find 2 or 3 people who make $38,000 a year who have 3 children. Okay? That person, if they work, has a check coming to them for $7,500 cash. It's called the Earned Income Tax Credit. If you've never filed, call them and say, have you ever heard of EITC? If they say no, and the likelihood is they'll say no, what's that? You say, congratulations, I went to this form. As a result of that, you're getting a check. Now, if you've never filed for EITC, it's retroactive for 3 years. That's how much? About $20,000, give or take. I want you to find 2 members of your family that qualify for EITC. And by the way, anything up to $65,000 in income, you qualify, just different ranges of it. I want you to form an LLC, limited liability corporation, and agree to put the proceeds of that money, all apart, into a limited liability corporation. And I want you to invest that in something you all agree on. A home that you can live in, or a home that you can rent out after you rehab it, or the stock market. Or if you're an entrepreneur here and you're working and you've created $25,000, $30,000, or even $50,000, that also qualifies. Take this nest egg, and I want you to put it into a very traditional stock account. Nothing magical. Now, I'm going to tell you how I lost money myself, and you're going to do the reverse of what I'm about to tell you. So 2 years ago, I had some money I wanted to put aside. And I was just in full disclosure, I lost money. I did what I tell everybody, don't be emotional about money. I took, really nobody's business, but I'll say the number. I invested $3.5 million in an account, and I immediately lost $500,000. It was January 2022, stock market began to go down because the interest rates went up. For 3 or 4 months, I lost. So after I lost $500,000, I did what I say don't do. I pulled my money out of the stock market and put it to treasury bills, put it to cash. So fast forward 2 years later, I asked my broker, what would have happened, just out of curiosity, with that account? So I'd already started with $3.5 million. It went to $3 million. They said you would have lost another $250,000. So I was like, oh, okay, so I made the right move. Nope. So I would have lost $750,000, so down at 2.750. He said you would have gained $750 back in the last 18 months. You returned your lost capital, and you would have made another $750,000 on top of that. If I did nothing. You hear me? Nothing. Just let the money alone. What do black people do? Ah! Warren Buffett said, when people are afraid, be greedy. People are greedy, be afraid. So I made a mistake. Now, I can afford to make that mistake. I wasn't trying to make money with that money. But what I'm telling you is you took that money, put it into a conservative, no Bitcoin, nothing crazy. Like what you wear. Target, McDonald's, Walmart, nothing crazy. Just, the index of the top companies in the world, and just let it sit there and go on about your business. Now, while that's growing over time, there's something called a margin account, and Eric mentioned this. You ever heard of a margin account? Okay. So you've heard of it. So a margin account is you lend to yourself. Now, I'm not telling you to go in debt. Please, I'm not telling you to go in debt. I'm saying this is an option. Once you have an account that's worth $50,000, you can get a margin account to borrow 50% to a maximum of 70 cents on the value of that account. You're borrowing from yourself at the best rates available. Now, you can then take that money and invest that in your business or invest that into real estate. Don't go shopping. Don't go buying Louis Vuitton. Don't go leasing a car. I'm saying that there's good debt and there's bad debt. Good debt is when it's something that will appreciate, and bad debt is tied to something that will depreciate. So I'm trying to give you just some tools that the wealthy use. You've never had a billionaire that didn't do it without good debt. No city grows, no government grows without good debt. Don't be afraid of debt. Be afraid of crazy debt, stupid debt, too much debt, Pookie Nim's debt. What you want is to be smart about this. So you build wealth in your sleep. So take money and put it in something that grows. Wells Fargo stock. There's the president of Wells Fargo Foundation in the corner, Darlene, right? Invest in her, right? Her. In fact, follow her. Home. Anyway. So I'm done, but I want to give you something really short and sweet. Earned income tax credit. Somebody says, I don't have any money. Whether you believe you can or whether you believe you can't, you're right. Is the glass half full or is the glass half empty? Depends who's looking at that glass. If somebody comes around you and says you can't do it, get away from them as soon as possible. If you hang around 9 broke people, you'll be the 10th. So get this earned income tax credit. That's venture capital for poor people. If you have some capital or a tax refund, take that money, put it into the stock market or find the worst home on the best block, buy it, rehab, hey supporter, buy it, rehab it, and rent it. Do not rent it to your cousin who don't pay their bills. Rent it to somebody who has got a good credit score. And by the way, after you finish with this conference, you're gonna go out on, today's Monday, you're gonna go out on Friday or Thursday, some of you gotta even go out on Thursday. If you're gonna say, oh, he's cute, and oh, she's so fine. After that, you say, what's your credit score?
Thank you, John. And I will remind you there's one other investment you made about 2 or 3 years ago, and you gave me a really hard time about me recommending it to you, and you got out, and I think you probably lost 50%. And I want to share that I tripled my money because I was patient. We're talking about the cryptocurrency. When he lost his shirt, and he was so mad at me. Yeah, he was so mad at me. He's like, I can't believe my CFO gave me this horrible advice. I'm like, just be patient, just wait. And if you've seen the news, it's done really well. I did not put a lot of money into it because I don't understand it, but I used it to track it and learn about it, and it made me want to learn. But I do want to remind you of that, John, that you did get a little too impatient on that one too. As we start talking about investments, that's another way for us to create generational wealth. And I'd love to get our lovely panel's discussion views on what do you see are alternatives for investing wisely, investing smartly. We know that there's been a lot of democratization of investing so that you can buy fractional shares. What are some things you suggest for our audience as they start to get into that arena around participation, but protecting themselves at the same time? Nadia is looking at me, so I don't know if she's scared of the topic or she's really interested, so I'm gonna call on her first.
I was thinking, I hope you call on someone else first. But, I mean, you just got a big endorsement for Wells Fargo stock, so there's that. But as John was talking, I was thinking a little bit about some of the trends we're seeing in investment that are driven by automation and the personalization that can come with that. And we are seeing a rise in much more affordable, lower cost robo-advisors. We at Wells Fargo even have kind of that spectrum of solutions. We have a designated personal advisor you can come and meet with in our branch. We also have Wells Trade where you can completely do it yourself and have stock fractions, and you can kind of choose where to play. And just one thing I think about personally is that I have both that robo-advisor, and then I also have the personal, his name's Dan, advising our finances. And as I look at the last couple years, Dan has not done as well as the robo-advisor, and Dan costs a lot more. But, when my son was born this year, the robo-advisor didn't call me, Dan did. And when my dad passed away this year, Dan was the one who showed up and kind of walked me through important steps. And so I think as we navigate these different solutions that help us make our decisions, and as we as the financial services industry figure out how to best serve our clients, we have to think about both that automation and tech, how do we make it more affordable, but also personalization and how do we make our clients feel the trust and the understanding as well. So I didn't really answer your question, but.
I think you did a really good job there. Max, when you're working with your community, and people are really interested in investing and thinking that's where they can become their multimillionaire and billionaires, what advice do you give them, and what are some of the tools they can use?
Most definitely. So first and foremost, create that savings account, but put it in a high yield savings. It's a great way to have that safety net there, but continue to grow and build for you. The next is Roth IRAs. I don't know if you've heard of this mechanism, but it's a beautiful opportunity to have tax-free returns as long as you wait until you are 59 and a half years old to do it. There's some pretty amazing data out there. If you were to invest $1 at the age of 20 in a Roth IRA with a traditional S&P 500 backing, that $1 will turn into $21. Leave it, forget it, don't touch it, come to it later. It is a wonderful opportunity. Another data point that I'm tempted to dig up, but I won't wait any longer, is if you were to invest 10% of your salary, it would take 51 years for the profits of that investment to pay your entire salary. If you were to do 20% of that salary, it would take, I think, just shy of 28 years to be able to live entirely at that same salary just off those returns. If you did 50%, it would take 17 and a half years to live completely off of that investment alone. And so we like to think about being safe, being sturdy. You know, most of the families we work with aren't high net worth individuals, and so we want to make sure that anything we recommend is something that is going to weather the storm. And so something that John mentioned or kind of pointed at, you know, over the last 50 years, every dip in the economy has been surplus and the gain back. And so if you are just patient, you leave it, you forget it, and come back to it, that's really going to be your best way to start small but grow pretty much exponentially over the next 20, 30, 40 years.
So patience, invest early, invest often, and don't be risky. So Eric's my disruptor. As you look at the ways that we can invest today, what are you seeing on the horizon as new and innovative ways for investing?
So you're talking about disruption. So allow me to throw into the mix something completely left field. So we're talking about how to make money by investing your money. I have a radical idea. How about you make money investing other people's money? And taking other people's money. And I will give you two separate, extreme examples of how this can pay out or pan out. The first is my children. So I have two 13-year-old twin daughters and an 11-year-old son. And as an entrepreneur, as a serial entrepreneur, I told them a couple of things that are very atypical of Asians, by the way. I told them that contrary to popular, and my father would just kill me if I said this to my children, but I said, contrary to popular belief, you're not going to be good at everything. So you don't need to get straight A's in everything. Don't not try, but don't beat your head in the ground or against the wall doing something that you're just not good at. But one thing that I do want to encourage them to do is to own their first business before they're 18 years old. And so I told them, and it's kind of like every week at home, we kind of play, Shark Tank, where they throw ideas at daddy and mommy, and we decide what we want to invest in. And so one of the recent ideas that they had was an idea for making caps for kids. It's actually capsforkids.com. Shameless plug for my kids. The site's not live yet, but the idea is they use the creative abilities of kids to make caps for kids. And what they want to do is they said, I want to go to different schools for fundraising, and as opposed to, if you're trying to raise money to go to a hockey tournament or something like that, sorry, I'm from Canada originally, so we use hockey as opposed to something else, instead of selling chocolates or doing car washes, maybe kids can design a unique cap, and then they can sell that to the community or the school, make money, and everybody participates on the upside. So from that side of the universe, they came up with this idea where they don't have to pay for the caps. They actually get pre-orders for the caps, and they get people to design, and they incentivize the designers by giving them a percentage of the sale of these caps. And then the money comes in, and they place bulk orders, and they have arrangements with, now is the best time in the world to be an entrepreneur to a certain extent, because 100 years ago, if you wanted to make a clothing company, you'd have to figure out how to design it yourself or get a designer. You'd have to prototype it. That would cost you money. You'd have to go to a factory and figure out, the manufacturing process. Then there's sales, marketing, distribution, retail, all that kind of stuff. Today, my kids can have other people design a cap on the website, send it somewhere else to be made, never deal with them any other way, get a Shopify store to sell it all on, and they use YouTube or whatever to market it to their fellow classmates. Amazing, making money without spending a penny of their money, or more importantly, mommy or daddy's. And they're doing it, and that's amazing. And that proves to you that if an 11 and 13-year-old can do that, anybody in this room can do that as well. The opposite extreme. So what did daddy do? In 2019, I founded a company called Cybin that focuses on curing depression and anxiety. Because so many of us suffer from mental health today. And that company has gone on to be a phase 3 FDA drug development company that has these incredible results. Our drug works on 75% of people with depression, and of those that respond, 100% of them go into remission. So that's going to be something that changes the lives of everybody in this room. Thank you. I don't take credit for that either. There's far more smarter people than I that developed that science. But I'll give you a little bit of the history of how that company started. So in 2019, we had an idea, what's going to change the world? What's the next big thing? We said mental health is going to be a big problem in this world. And sure enough, in 2020, the pandemic hits, and our children and various other people are stuck at home, and their mental health is deteriorating. We went out and raised money for that company with an idea about how these drugs would help people, and our first valuation was 11.7 million Canadian, so like $5 US. And we went and raised about $1.5 million of other people's money, and what they really did was they looked at our idea. We came up with a very smart, well thought out business plan. A business plan, by the way, that has completely changed about 3, 4, 5 times over since we started the business, so learn to be flexible. And then during the pandemic, in Zoom meetings, because nobody could meet anybody, in our basement, in our underwear, we went and raised another $7 million at $35 million valuation. And then when we went public, we took the company public, and we raised another $35 million at $70 million valuation. We took that company from 0 to $500 million in less than 18 months, delivering our investors 1,800% return. And that all happened when we were at home in the pandemic. And it's been 5 years since, a little more than 5 years since, and now that company is listed on the New York Stock Exchange American. We have raised over $300 million, and we are going to deliver a drug that changes the lives of everybody on the planet in about 2.5 years. So both examples, both very different, both very extreme, but still going out there, taking other people's money and building something tangible and real, with nothing more than one's ingenuity, thought process, a well-designed business plan. So anybody can do this, whether you're 11, 13, or, well, let's not be polite and say how old I am, but in any event, these are things that you can do today. And don't let anybody tell you it's too hard, or you don't know enough, or you're not smart enough, or you don't have enough money. Because the answer to not having enough money is finding somebody else's money.
I like that approach. Well, I could sit up here all day and talk to these 3 panelists, but I think what we've learned is educate yourself, surround yourself with smarter people that can help you through your journey, invest in yourself, and be creative in the ways that you can access those funds through the Earned Income Tax Credit, create an LLC, as John said, and taking a margin account on that. I'm not endorsing Bitcoin, but when you invest, be patient with your investments. I want to thank all of you on our panel today for a very lively discussion. I want to invite all the people in the audience today, if you'll exit to the door in the back to the right, Wells Fargo has a refreshment table set up. And if you enjoyed today's session, Operation Hope is all about paying it forward. If you've downloaded our app, consider donating so that we can pay it forward to bringing more and more people to our conference every year. So enjoy the rest of your time here, and thank you for being an amazing crowd.